2 days ago, the President of the United States stood before Congress and delivered the longest State of the Union address in modern history. 108 minutes, nearly 2 hours of promises, celebrations, and attacks. He talked about immigration. He talked about tariffs. He honored the Olympic hockey team. He gave a Medal of Honor to a 100-year-old veteran. He said, and I quote, that the roaring economy is roaring like never before. But there was one number he never said. Not once. Not in 108 minutes. $38.8 trillion. That is the current national debt of the United States of America. And the President of the United States just delivered the longest speech in State of the Union history, without mentioning it a single time. Now, I want you to think about what that means. Because this isn't a political opinion. This is mathematics. When the leader of the most powerful nation on earth stands before the entire world for nearly 2 hours and refuses to acknowledge the single largest financial obligation in human history, that tells you something. It tells you the debt is no longer a problem they plan to solve. It's a problem they plan to inflate away. And if you understand what that means for gold and silver, you understand why both metals are sitting near all-time highs right now. Gold at $5,168, silver at $87. But that's not all that happened in that speech. Because buried in the middle of those 108 minutes, Trump made a claim so extraordinary that most people missed it entirely. He said, and again I quote, "As time goes by, I believe that tariffs, paid for by foreign countries, will substantially replace the modern-day system of income tax. Replace the income tax with tariffs." Now, I've covered tariffs extensively on this channel, and I need to walk you through why that statement, combined with the Supreme Court ruling from 5 days ago, combined with what happens tomorrow at the COMEX, creates a situation that every gold and silver investor needs to understand right now. And let's start with the math. Trump says tariffs will replace the income tax. Let's test that claim with real numbers. The federal income tax generates approximately $2.2 trillion per year. That's the revenue that funds most of the federal government, military, Social Security, Medicare, everything. Now, before the Supreme Court struck down the IEEPA tariffs last Friday, the total cumulative revenue from all tariffs, IEEPA plus Section 232, was projected at approximately $2 trillion. But that's not per year. That's over a decade. $2 trillion over 10 years versus $2.2 trillion per year. In other words, tariffs generate in 10 years what the income tax generates in less than 12 months. The math doesn't work, and every serious economist, left, right, and center, agrees on this. But it gets worse. Remember the One Big Beautiful Bill Act? ALBA, that's the legislation Trump signed, that cut taxes, expanded credits, and increased spending. The total deficit impact of that bill alone is $4.1 trillion over a decade. And the tariff revenue, even before the Supreme Court killed IEEPA tariffs, only covered about $2 trillion of that $4.1 trillion. So we have a $2.1 trillion gap. And that gap gets filled with one thing: more debt. Now here's where the Supreme Court ruling matters. Last Friday, the court struck down IEEPA tariffs 6-3. Trump immediately pivoted to Section 122 of the Trade Act, which allows a maximum of 15% for a maximum of 150 days. That means these new tariffs expire in July. And Section 122 tariffs generate less revenue than IEEPA tariffs did. So the tariff revenue picture just got dramatically worse, not better. The gap between what the government spends and what it collects is widening. And widening gaps get filled with, you guessed it, more borrowing, more treasury issuance, more debt. The national debt is $38.8 trillion. The deficit this fiscal year is tracking above $1.8 trillion. And the Congressional Budget Office projects deficits will exceed $2 trillion annually through the end of the decade. This is why Trump didn't say the word debt. Because there is no plan to reduce it. There is no path to balance. There is only one direction: up. And the market knows it. Gold didn't hit $5,000 because people are scared. Gold hit $5,000 because the bond market is doing the math that the president refused to do on Tuesday night. Let me show you what the metals market heard during that State of the Union speech. Because gold and silver aren't just trading on supply and demand right now. They're trading on the structural collapse of fiscal credibility. Gold has been rising almost continuously since early 2025, from around $2,900 to over $5,100 today. That's a 75% move in less than 18 months. The World Gold Council reports that 2025 saw the highest total gold demand in history, 5,002 tons. Central banks bought 863 tons. China's central bank has been buying for 15 consecutive months. And here's what most people miss. Central banks aren't buying gold because they think the price will go up. They're preparing for a world where the dollar is no longer the default reserve currency. De-dollarization isn't a theory anymore. It's a purchasing pattern. Now silver is at $87 today. It was $32 a year ago. That's a 172% increase in 12 months, and the driver is different from gold. Silver has a split personality. It's part precious metal, part industrial commodity. 54% of silver demand comes from industrial use. Solar panels, electronics, electric vehicles, medical devices, 5G infrastructure. Industrial silver demand hit a record in 2025 and shows no signs of slowing. But here's the structural problem. Silver mining supply has been essentially flat for years. Global mine production sits around 820 million ounces per year. Total demand exceeds 1.2 billion ounces. The deficit, demand minus supply, has been running for 4 consecutive years now, and that deficit is being filled by drawing down inventories, which brings us to what happens tomorrow. Gold hit $5,000 because the debt is unpayable. Silver hit 87 because the metal is physically disappearing. And the President of the United States just told the world that everything is fine. Now let me tell you why tomorrow, February 27th, matters more than anything Trump said on Tuesday. February 27th is COMEX March First Notice Day. But let me give you the critical update. March is the biggest silver delivery month of the year. The open interest represents approximately 429 million ounces of contractual silver. The registered silver in COMEX vaults is down to roughly 89 million ounces. And it's been draining at nearly 800,000 ounces per day. In February, the delivery rate hit 98%. Nearly every single contract demanded physical metal. If March sees anything close to that rate, the math is simple. 429 million ounces demanded against 89 million available. But here's the connection to the State of the Union that nobody is making. Trump stood before Congress and promised that tariffs would replace the income tax. That's inflationary. He promised more tax cuts through OBBBA. That's deficit expanding. He didn't mention the $38.8 trillion in debt. That means no plan to reduce it. He called the Supreme Court ruling on tariffs unfortunate. Every single one of those signals points in the same direction. More dollars chasing fewer goods, more debt requiring more printing, more uncertainty driving more safe haven demand. And where does that safe haven demand go? Into gold, into silver, into the physical metal that sits in those COMEX vaults that are emptying every single day. The State of the Union wasn't just a speech. It was a catalyst. Every fund manager, every central bank, every sovereign wealth fund heard those 108 minutes and drew the same conclusion. This government will not stop spending. This debt will not be repaid in real terms. And the only protection is hard assets. Tomorrow we find out how many of those fund managers are backing up their conclusion with action. How many March contracts stand for delivery? How much silver actually leaves the vaults? And whether the COMEX can handle the math that the president refused to do. So what happens from here? Let me lay out what I'm watching over the next 7 days. And what I think it means for the metals. Number 1, COMEX delivery data starting February 28th. The first delivery reports will tell us instantly whether March is following February's pattern. If the delivery rate is above 50%, this is the most significant delivery month in COMEX history. If it's above 75%, we're in crisis territory. I'll be covering the data daily. Number 2, Treasury yields. After the State of the Union, Treasury yields edged higher. That means the bond market is pricing in more debt issuance. Higher yields mean higher borrowing costs for the government, which means even larger deficits, which means even more debt. It's a feedback loop. And it's bullish for gold. Number 3, the Section 122 expiration timeline. Trump's current 15% tariffs expire in 150 days. That's mid-July. Before they expire, he needs to either find new legal authority or accept lower tariff revenue. Either outcome increases fiscal uncertainty. And fiscal uncertainty is the number 1 driver of gold prices in 2026. Number 4, the Shanghai premium. Physical silver in Shanghai is still trading $3 to $5 above COMEX prices. That premium tells you that Asian buyers are willing to pay more for real metal than Western paper markets are charging. When the physical price diverges from the paper price, the paper system is under stress. Number 5, central bank buying in March. The People's Bank of China just completed its 15th consecutive month of gold purchases. If they accelerate, or if other central banks join, that's structural demand that doesn't reverse. Now, what does this mean for you? I need to be clear. I am not a financial advisor. This is not investment advice. What I do on this channel is present data, connect patterns, and let you draw your own conclusions. But here's what the data is telling me. The President of the United States just delivered the longest State of the Union in history and avoided the single most important number in American finance. The debt is $38.8 trillion and growing by $2 trillion per year. The tariff plan to replace income tax is mathematically impossible. And tomorrow, the COMEX faces the biggest delivery month of the year with the lowest inventory in years. Gold is at 5,168. Silver is at 87. Central banks are buying at record pace. Industrial demand is at record highs. Vault inventories are at multi-year lows. These are not opinions. These are numbers. And numbers don't care about speeches. If you want daily updates as the March delivery data comes in, hit subscribe and turn on notifications. Check the description for timestamps, links to my COMEX analysis, and the playlists that cover every angle of this story. This is Money and Empires. The math is the message.